Good morning, everybody. Welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and it is Tuesday. Now, we don't have any big economic events coming up today, but we are still going to give you guys a great show. We'll break down some headlines as they come out, anything that transpired overnight, and also give you guys some actionable key levels and market insights that you can use every single day. So hit that like button if you're ready to make some money, because Market in the Morning starts right now. All right, good morning, everybody. Good morning, guys. Drop a good morning, drop some W's. Famous, what's going on? Welcome. Hello, Eric. Good morning. Ozzy, good morning. Hope you're all doing well, guys. Happy Tuesday. All right, let's dive right into it. Where do you guys want to start? S&P or NASDAQ or gold? Let's start with some S&P. Let some more people roll in, and then we'll hit gold. So first headline we see when we have the ES on our chart is Taiwan chip curbs and Fed CPI risk temper risk on relief. So if it's messing with some type of risk on, right, that means markets are risk off. When we're considering things between risk on and off, that's sort of considering it as buying or selling. If we're risk on, there's a lot more buying opportunities. If it's risk off, people are taking their capital out. Think of it like if they're taking risk off the table, they're taking their investment out of risk. So let's go into some ES. We also know that we had a pretty strong sell-off the other day. Good morning, Garrett. What's going on, man? DLC, good morning. Dylan, hello. Hope you guys are doing well. Good morning, Silver. DLC, hello, everybody. So guys, look at this. We see on ES, we could open up our chart here on market. We did have this big sell-off. This was on Friday. We remember this big move. We could click any candle here and sort of give us some follow through. So that's funny. Follow through equity selling as jobs data lifts Fed hike expectations and yields. NFP earlier showing third straight month of strong U.S. jobs growth, which is hawkish for the Fed. Treasury yields rising as hot jobs data fuels rate hike bets, pressuring equities. So it really does become a whole lot to consider with what the Fed is going to do, right? How's policy going to change? Are we shifting more into a risk off area and more of a rate hike environment? Or are we staying where we're just holding rates steady? And before we have been holding rates steady, so it really wasn't giving much of a pull whenever we got some type of headline from the Fed. But at this point, we're sort of running into some headwind that suggests possibility of a rate hike. Now, that is a complete shift in the market. That's a complete shift in the Fed's policy, and that could be enough to lead us into some sort of sell-off and pullback. Let's check our breaking news headline right here. So average weekly U.S. private employment change for 4 weeks ended with May 23rd, 29,000 for ADP. So let's check our economic calendar. We had ADP about, what was that, 10 minutes ago. We're going to hit our brain icon here, just see how it went and what happened. Key input for central bank rate decision signals overall economic strength and trends. High impact released often moves currencies on surprise. Prior month revision can amplify. So we didn't really have the biggest of moves. It actually moved down over the past couple of months. ADP, which is the private employment. Nothing major, nothing red flag, nothing that's really going to push rate hikes or cuts any further than where they are right now. If you want, what you can do, guys, let's say you saw this headline and you're not sure, well, what does this really mean for us? We could hit the brain icon here. Market's going to explain exactly what this means. Yo, Seb, good morning, brother. How are you? Fear, uncertainty, and doubt. FUD. I like that, bro. I like that. Yes, sir. A modest 29,000 plus average weekly increase in U.S. private employment suggests a still growing but cooling labor market. So remember, guys, I don't know if you guys have joined our recent shows, but we talk about what moves markets and what sort of demographic we should be looking for in the domino effect that happens. Now, the jobs data is usually the last one to go. So once we start seeing cooling jobs, we start seeing unemployment starts to rise again, things really start getting shaky. That's going to be sort of our last signal that, hey, listen, things are getting tough. Markets are starting to fail. Look for that big change. Yo, good evening, Malvin. What's going on? Guys, we are going to have Nolab joining us in just a moment. Here, we'll bring him on. We have some announcements to make. going over some of our the market integration into TradingView. So let me bring on the lab and we'll get that going. Nil, good morning, brother. How are you?
Hey, good morning, Kevin. How's it going, man?
Dude, I'm doing good, man. How are you?
All good, brothers. Early morning, another day in paradise, and
Yes,
we're back
sir.
to work. We're back to what we do best.
Yes, sir. You know it. You know it.
Absolutely, man. How's your morning going?
Dude, it's going pretty good, man. Can't complain. How about yourself?
Oh, fantastic, man. Early morning, and then now, just gonna look for some setups. We're gonna
Yep.
call it some trades, hopefully, and it can be a jam-packed value session. Where we hopefully make some money. So
Yes, sir.
the end of the day, that's our goal, right? As traders, we're here to make money. We're here to take all this information that's going on and use it to make some money and put ourselves on the right side of the market. So I think we could jump right into it. What are you looking out for today, Kevin?
Yeah, so we haven't gotten into any of the charts yet, just sort of going over the overall what markets are showing us. ADP just came out a little lighter than I don't think it was lighter than expected, but lighter than the previous readings. Prior was 35,000. Now we're looking at 29,000, but we know that this isn't the biggest impactful of events. So just sort of going over it to see where we stand. International trade deficit is also at 830.
Yeah.
Sometimes that gives us an impact if it's at an extreme, but I'm really not expecting that. We haven't had any new tariff situations, nothing major to really throw off our international trade deficit. What are you looking at, homie?
Well, not too much on the data side of things. On the war front side, there's again the same stuff going on, and that's why it's crucial to keep your market integration on TradingView. Which, guys, I need you to drop a 1 if you're a market user, and if you use market every single day, drop a 1 in the chat because I'm about to announce something very important, and I'm going to send a link that everybody's going to end up using. So yeah, drop those 1s so we can see them coming in. And basically, we are now launching our Chrome extension and our integration to TradingView. So I'm going to drop the link. I'll drop it in the chat, or actually I'll send it to Kevin. He'll drop it for me.
Sure.
Or one of my teammates will drop it. But if you are a market user, you will be able to download this Chrome extension, log into it, and instantly you'll see it on TradingView. Once it's installed, you'll see it like this. Once you click on it, you'll be able to log in. It'll log you in if you have market open, and then you'll be able to see all of the live news and the calendar. This is the initial version of the integration, and it is going to continue. So you're going to get more and more added to this, but this is great for people who trade futures, trades, anything you trade, and you have your workflow on TradingView. We have now integrated into it. So Kevin, I'm going to send you a link if you can drop that in the chat. And the team and the users, what they can do is that users can now go to here, Market AI Live News and Events. It's currently not available for search on the Chrome extension, but you can use the link that Kevin is dropping in the chat. And with this, you'll be able to go here and add this to your TradingView website. And it can also open up on other websites, but keep in mind, guys, that we want to make your life easier. And now we get closer and closer as updates come on. And now look at this. Now it's easier than ever to have TradingView here, to even have market open here, because we want to look at the bias, right? If I want to look at gold, okay, gold I know is still bearish, so I'm going to be looking for sells. And we're getting those. Looks like we're still unable to break the sell area that we called out yesterday, right? Like the 43.50 area, which we talked about was going to be a point of resistance right here. Right.
Really, the same link that same link that she sent earlier.
Yeah, the same link I just sent you right now in the private chat. You can send.
Oh, I didn't see that there. Got you.
Yeah, you can send that one, and it will open it up to the Chrome web store, which users can then download it. So it's currently available only on Chrome, guys, but we are working towards other solution. So you can always drop us a message for our users, and then they'll be able to for our team, and then they'll be able to let us know what you really wanted on. Okay, so again, thanks a lot, guys, for supporting, and yeah, we're very excited to bring this for you guys.
Awesome, man. That's awesome, bro.
Yep. So things like this are what's important. It's you're paying for a service and a product that makes your life easier. and I've talked about this several times, is that market is a premium product, but we do a lot for what the value is at. We charge our users $50 a month, and we have not increased the price since launching. And that was over a year and a half, almost 2 years ago, this December. And we've not increased prices. Every other platform that has launched has increased prices. So what this means is that we continue to ship value at a price that is unbeatable in the space, and you cannot get this type of value from any other platform. You can mark my words. I will personally send you $1,000 if you can find me a platform that's equivalent to what we do and better. So that doesn't exist. So now you guys have your TradingView integration open up on your charts here, and you have your TradingView chart here. Now, when we dive into it, it's very easy for us to keep track of the calendar as well as live news if your main workflow is TradingView. So now as I'm on gold, I can see that, hey, I have the news and I have my calendar here. My calendar events, I have it filtered to just US currently, but you guys can filter it however, and then it mimics it on your actual market dashboard. Now, what I'm looking for and what we're going to be paying attention to on gold is we can see gold is still in our bearish bias. And we have our pullback area, which we previously talked about being 43.75 as one of them. Yesterday, we mentioned that 43.50s was another one where we're going to see struggle breaking. Yeah, thank you so much, Eric, man. Appreciate it. History continues to be made. Glad to witness it all. Thank you, brother. Appreciate that. Yeah, amazing, amazing. Guys, if you really can, please leave us a 5-star review on the web store, Chrome web store. This took us a long time to make, and we're just excited to get it out for you guys.
That's awesome, guys. Least you can do is a 5-star review, man. What an awesome product. They bust their ass putting this together, man. Yeah, market team is constantly grinding.
Yeah, and just to put things in perspective for you guys, how fast we move. If you see a company taking months to get out an integration, to get out a feature, or the smallest updates, just know they're just lazy. This took us about a week to build, and it took us about 2 days to get it up and running, and that's when I demoed it for you guys last week. So it really took us 2 days to really get it running, and then it took Chrome forever, Google forever to accept it. So we move fast, and just instead of standard in this space, everybody else moves slow like snails. And that's why we continue to win, and we're going to continue to win. You can't stop us from winning. Like, you know what I mean? This is God's plan. We're just living it. You can't stop our win. You can't stop our shine. You can't stop the extraordinary run we're about to go on. So now, getting back into this, if we see this level holding, this can lead to gold sells towards the downside. But then I would be careful as we head up into this area, because we didn't get that much of a pullback here, okay? And that's why I'm also thinking that maybe deeper into this session, if sellers are unable to drive price towards the downside and really below 4,300, like if this doesn't play out, then the next logical play is, okay, we're going to see buyers take price up to like 43.75 area if you trade CFDs, and you may see something like this. And then over the course of the session or the next intraday period, we continue to make our way down, similar to how we do in like Asian sessions, how you have that sort of push towards the upside in New York. And then later in New York, you get that outflow from gold after it does a nice retracement, since sellers were unable to drive price down from here. So it's a similar type of movement where you have to think about it in sessions, right? You have to think about how does this intraday period develop, or how are the next few hours going to develop the price action for the daily candle. So now when we look at that and we're paying attention to this, where let's say sellers are able to drive this down towards here, this level would need to break before we can even reach the previous intraday lows. If it doesn't break, well, guess what? Buyers are likely to jump back in and drive price up to a higher price point where there's going to be more sellers waiting. And remember, this is a much better selling price than this is. Just mathematically, it's a way better price to take a short position than this because it's a higher price. So any price that's higher than 43.50 also has a higher probability of the shorts playing out, just because it is a better sell price. Like, of course, when you compare 43.75 to 44.50, this is a much better selling price. You get the point. The point being that anytime gold is going to see those pullbacks, eventually it will get faded out when there is enough sellers in the market. So that's exactly what we're waiting for right now.
Looks good, man. Looks good.
Excuse me, I said to sneeze.
So
that's what we're waiting for, is that this is that A+ setup, right? This This is an A plus setup over here. Your 4,400 short, like going into this area, would be your A plus plus setup. Like I said, the deeper it goes, the better and the higher the probability of us winning. And the shorts playing out in a degree where it's much more volatile, one-sided volatility, or just in a fashion that's controlled, easy to trade, and then easy to scalp too. Because once this move was set up and we took the shorts live on market in the morning right here on last Tuesday, you can see that every intraday, every lower time frame pullback, break below, retest, was eventually just continue to sell off. And that's what we want, is that we want to catch a move like this. Yes, you can take advantage of these pullback areas, but that it's just a pullback, right? That's all it is. You're not going to expect to get 1,500 pips from a pullback, when the point is that we can catch those in the short. And then what starts to happen is that when you look on the intraday time frame, and I'm just going to close this for a second. When I start looking on the intraday time frame, I can start picturing in my head, okay, I have this massive range that exists to my left over here, right? Which I previously know was the new low created, where we had buyers jump in here to drive price, create a lower high after this massive move towards the downside. And I mentioned this before, is that this bounce up was just relative to this drop, right? So this bounce up didn't really shake anything out. It just created that structure from the start of the war, and that structure has continued to hold as we continue to get new lower lows printed. So now what comes next? What comes next is, of course, that pullback phase or some sort of consolidative phase for the market to get those orders collected before we get the next downside play. And where can we go? And we've been mentioning this like all the way from here, is that eventually over the course of the time, escalations, de-escalations, gold will eventually make its way right back down to 4,100 and potentially maybe even lower. Maybe take out the buyers here. You might see this low even get taken out, and then the market goes and creates a next lower high like this. So this is called being able to forecast what could happen over a long period of time, and just overall market psychology. We know the markets love to do these sort of moves, but then all of them eventually get faded out, and then the actual bias gets aligned and markets start moving in that direction. Now, so that's why we're mentioning is that this is just that phase where we have to be a little more patient and sit on our hands a little more, because you can see that we are not currently ready to sell. Now, how do we notice this? The reason we can see this is that, okay, yesterday we mapped out this area potentially for price to come, retest, and we got that. We got that at 10 a.m. Price came down, price tapped it, rejected it, came down here, came back to retest it later on in New York session, rejected it again. We started forming a support here. Price came back again overnight at around London open or pre-London open, and then pushed back down. But you can see we keep revisiting this area, and we're staying in this smaller, lower time frame range. Now, this would need to give before we can continue towards a downside. And if that happens, maybe we can look for some shorts here or some easier scalps that are confirmed. Once we break below here and break below here, then we can just ride it down to here. And then we got to be a little more careful, because we don't want some sort of like double bottom to occur and price pushes higher because sellers were unable to sustain this sort of downside, right? And this is where those thinking about all these scenarios come in. You're not just going to think about your short scenario at 43.50 and then that's it. You gotta keep in mind there's other things that could happen. There's different forces at play here, and it's just not one market participant playing here moving the markets. It's a collection. This is the price right now is an agreed upon price by everybody in the world. That's what it is. That's why the market's always right. It's never wrong. You're always wrong. We're always wrong, right? We always get it wrong. The market is always pricing in the most accurate price for this specific market. Now, if that happens, cool, perfect. But the main meat and potatoes, let's say we break above here. Most traders, what they would start to do here is that they would start to look for these breakout buys. And this is where they fuck up, is that they start to look for breakout buys over here, thinking that price is they're going to squeeze this extension. And then that's what they go for. And now what you get used to doing is when you win 1, 2, 3, 4 trades like this, is that you completely lose sight of the mass amount of moves that happen with the trend. These massive plays that people end up missing that are like 4,000 pips. Let's say 9% play on gold over the course of just 2 weeks. See, moves like this take place, and then people get blindsided when they just chase this small breakout retest buys up to a better sell point. When the better trade isn't actually on these breakout buy, it's this sell. It's taking advantage of the intraday bias that we have on market, understanding that hey, there's these things that are in play right now. So since they're in play, we know that any escalation, like even here, de-escalation still incomplete with sporadic strikes in Lebanon. The market knows this. Market knows that hey, yes, there's de-escalation headlines coming in, going out, but at the end of it, none of it's true. Like the war has continued to escalate. It's continued to escalate day in, day out. There's a reason why oil is still sitting at like 89 and above the 80s band, right? Like there's still a reason this band is still holding, because the war still keeps getting escalated. Maybe we end up in a range that's something similar to this, right? But the point is that as long as we remain above the pre-war, as long as we're above the pre-war oil price point, you know that there's escalations and the war is still in focus. Yes, if we were to correct this entire move and then come back down into 60s, then okay, market's losing its focus on the war, and maybe the next thing in focus is going to be just rate expectations and what inflation is looking like going into Q3 and Q4, right? Looking at now equities rebounding off these lows that we called out these buys. Go to 1 hour 33 minutes on Fridays, market in the morning, post NFP, where we called out these sells as well, and we said, guys, those buys from this low may not play out because we had a flip watch on ES. We had ES flip watch talking about hot labor market data that could flip it bearish, and it did. So we got these buys, took advantage of it. We called out the take profit here for a solid 97 points, which is a fantastic trade on ES, 97 points. And then I still have a runner going, but I did not enter at these lows here, or at this higher low. But if you're a scalper, or if you were watching the charts, this is a valid area to take those buys, because we had this rejection. Either we go, and we talked about it yesterday's stream, is that either we create a higher low somewhere, right? Or we do a complete double bottom, which would be those ideal intraday swing setup buys that we know equity markets are delusionally optimistic. So we have a higher probability of going towards the upside after having such a massive outflow on Friday. You have to look at everything that's relative. Just like how gold, when we're looking at gold, the CFD on gold, we had this massive downside play, and then we had like about a 68% retracement over here, or 61% retracement. Kevin, take a nap, buddy.
You know what, bro? That's my fault. I was up late watching the Knicks get their ass kicked by the refs.
That's why I'm here. We run off each other's energies. Like Kevin's tired, I'm running on full speed. If I'm tired, Kevin's running on full speed. So it's called teamwork, guys. Come on, don't call Kevin out over here, all right?
Thank you, Nawab.
Yeah. Anyways, somebody ban him. No, I'm kidding. So going back to just like how we were saying that it's always relative. So this massive downside we had just an equal amount of rebound and relief on the upside. So we came back up like 50 to 68% retracement. It's a similar sort of movement that we see happen across markets when moves like that happen, is that Friday's jobs market doesn't shake out buyers from the greedy stock market, right? Like we know equity buyers are just straight greedy. It doesn't shake them out. We know in the intraday period, we're going to get this relief, and we're probably also just as equally likely to get another retest of either this area over here or down here again, which is fine because the trend is still intact. Yes, we may be a little bit bearish in the intraday bias, which can just lead to a pullback here, but keep in mind, and then you have to use your logical brain and be like, oh, okay, we had buyers jump in here. Maybe during cash open, we get something like this, where we get a price setting up and then market just pushes up, or we get a pullback back down to these lows, retested double bottom, see how price reacts and push up. This would be the types of plays we would look for today. Now, What I wouldn't want to look for is I wouldn't want to try to short going into this area, right? Because these are active demand levels that we're watching out for. Another reason why these could play out, or if just the market continues to push higher, is for potentially to set up for CPI tomorrow. And this is where positioning ahead of data comes in. Now, keep this in mind. If gold can set up those sells today, right? Let's say gold can take us all the way to 43.75, and we get that rejection at 43.75, and let's say that rejection comes, we get something like this, and then we enter our shorts, and now we're in profit going into Asian session. Asian session does a quick retest. We are again in profit. By the time you wake up tomorrow morning, gold is somewhere here, right? CPI comes in hotter than expected, above forecast, maybe even near the maximum of 4.3. And then you see gold dump. And that's the positioning here. The positioning here is that you're aligned with the intraday bias over here. We go to the economic calendar. We look at what's coming up, CPI. Oh, CPI is actually forecasted to increase from 3.8 to 4.2. That's a 4% increase on the year-over-year reading. With a minimum expectation is already a 0.3% increase above the prior. So CPI is going to go up. Markets already are pricing that in. So if the market can get premium positioning like this before an event, knowing that we're likely to get a hotter reading, if we go above 4.2, near 4.3 and above the minimum, then you're going to get that hotter print. You're going to see that continued downside towards gold, right? Maybe give or take the whipsaws, then that would be that clean one-sided positioning. Now, if CPI actually comes out, let's say CPI comes out right at the minimum, it's still an increase, but it's at the minimum expectation, right? If it comes out 4% below the minimum and increase, it's going to be the opposite reaction. We're likely going to see a pullback into the known resistance area before we see sellers fade that move out. So this is just how we forecast data and how it could play out. Yeah, exactly. It would be nice to see 43.75. That's why I would love to see whether we take this area out going into New York session, but it's going to be very, very cool to see this play out, exactly how all these moves have played out, right? All we have done in these types of plays, especially when you see consolidative conditions where sellers are trying to come in and they're unable to sustain that selling, is that you just see that massive liquidity push towards the upside to induce those sellers into the market, and then sellers come in from a better price point. So that's all we have to wait for, is that, look, here sellers couldn't drive price down. What happened? Buyers just drove price to a better sell area. Same thing here. Sellers unable to drive price down from 44.75, 78. You can see they tried for a few hours, and then buyers took price up to a better resistance area, and then actual sellers came in. So it's similar price anatomy, similar price psychology. And that's what we're waiting for, is that if this happens, this is just a hypothetical. New York session taps 43.75 and rejects, right? Let's say this happens, and now, I gotta move this way. This happens, it rejects, and then we see this push towards the downside. Then you can see like Asian Pacific retest after sellers. Retest after sellers right here. And then this could be like your post-hot CPI positioning in place, right? So now you start to see how this timeline would end up working out, similar to how we had NFP play out last week. And we talked about this going into Thursday. I was like, hey guys, if we get this retest of this area over here, which we previously took those sells the day before, if we get a retest of it, guess what? It's the same thing. It's this exact same thing happened where you had New York session tapped, what was this, 45.12, 45.15, let's say, okay? And then you had this Asian retest right here, right over here. and then you had positioning in place for hot NFP. Now do you see what I'm talking about? That positioning takes place before. Market participants, institutions, hedge funds don't position themselves after a play.
Right.
They're positioned before. You had New York session tap 45.15. We knew sellers are dominant in this market environment. We knew there's a range to fill towards the downside. It came after sustained upside, all these pullbacks getting faded out. New York session sets up after the entire week of selling out, creating this low, retest, pull back, create a lower high. Right in New York session, we executed these shorts. Jeev called it out on Market in the Morning on Thursday. I came in shortly after. We talked about writing these down. This happened, Asian Pacific retest after sellers were already in. We got that retest. We came back down to these lows, came back up to set up for NFP. And guess what? Hot jobs report caused this outflow. Now, what would have happened if we got a much softer jobs report? Guess what would have happened? We would have likely just pushed up into this area, and then sellers would have faded this move out again. So that's what the positioning here is about. And the similar thing could happen going into CPI, is that it's either 43.50 holds, or we get this play towards the upside to 43.75. Then you can look for those pre-positioning. Position yourselves with the market bias on the day trading time frame, and then really take advantage so that going into CPI, you're comfortable. Your stop loss is at break even in case of NFP over here. And then you can really just ride it free and just wait for the outcome. Worst case scenario, you get stopped out, break even in that case. Same in this case. Let's say if we're here for CPI, price pushes up, stops us out, great. I'm just going to look to see how market digests this data and then adapt and attack. So hopefully that's pretty clear for how to position, how we're looking to position ourselves for CPI. And that last week's NFP was a great example of that. Like, we talked about it on Tuesday, Wednesday, Thursday going into NFP. And then we had the NFP report for which we were already positioned for. So this isn't just a one-time thing. This happens quite often, where you can look for positioning alongside the macro bias before a major data report. And sometimes that occurs a day, 2 days, a few sessions before, and that's fine. It's just that you don't want to be taking it right before or instantly after. You want to let price action tell you and guide you, and let the data guide you, because the market moves off of expectations. The print is alone just a regular number. How it compares to these institutional expectations that we have on the market calendar, in this case for CPI being a minimum of 4.1, 4.3, all retail traders, all they see is the forecast of 4.2 and a prior of 3.8. What happens if we get a reading of 3.9? People are going to think that all that compares to is the forecast and the prior. But you got to keep in mind, we completely would have missed the minimum in this case, right? Markets aren't expecting that. Institutions are expecting this range here for the CPI print to fall somewhere within 4.1 or 4.3%. Just a quick reminder on gold, we are seeing again rejection of this of these highs. So we'll see how this plays out in this positioning. And I'm still in from my 43, 44 over here, which I talked about on yesterday's stream, right? I talked about if we come into that area, I'm going to be looking for. I've been in this for over like a day now, so I'm personally just getting tired of this. If this doesn't play out, perfect. I'll take the stop loss on this, which is, for me, it's right above here, and then I'll look for my short here. But I was fully transparent yesterday that, hey guys, I'm going to test this. I know it's not too big of a range, but this could still hold. So you can go back to yesterday's stream and look into that call. So if this plays out, it plays out. If it doesn't, great. Then this scenario plays out, which we're already mentally prepared for. And that's what it's about, is that my risk over here in this position from right here isn't the same as it's going to be up here. This is a much lower risk because my downside is not big enough, right? Versus now I take a short up here. Guess what my downside is? It's this low. And it got reached right after NFP. So that's what true positioning is about. A position for this in case we drop towards the downside, perfect. I'll secure. I'll see how price reacts here. I'll move it to break even. Otherwise, I'm happy to take that stop loss. I'm happy to understand, hey, I know there's better positioning up here. So, but I'm also not scared to take a shot when I need to step up to the game and swing the bat. So that's where you have to keep a conviction in mind. And I talked about this yesterday, is that this was my first attempt. Okay. Where was it? This was my first attempt right here. I've been in this position overnight since almost 24 hours now. It's made zero progress. So now if I know I'm mentally prepared to, if this doesn't play out, perfect, I'll execute here. But the point is my conviction doesn't change just because I got stopped out. I know it could take multiple attempts to get positioning right, and I'm fine with that. I'm fine with that. What I'm not fine with doing is analyzing and then hesitating, because that's not who I am. I'm gonna step up to the plate and I'm gonna swing the bat as hard as I can, and that's how you hit the home run. You don't hit home runs by coming to the batting plate and then start stuttering and shaking your hands. You hit it by having conviction, by holding your conviction and then executing with money on the line.
Awesome, man. That's right. Conviction and confidence. You don't have confidence, you're gonna chicken out of your trades. You're gonna cut losses. You're gonna cut winners. You're not gonna be able to trade properly. You're gonna get inconsistent results. Gotta have confidence in what you do. That's also sort of the goal of market, is to help you guys build that confidence, actually understand what's going on in the economic calendar, in the breaking news headlines.
Yeah, 100%. So guys, this Chrome extension currently you can use it in Edge, Brave, Arc, and Opera as well. So we are working on the implementation for Safari and Firefox.
Nice. Awesome, bro. That's such a cool update, man.
Thank you, man. I appreciate it. And thank you so much for the comment. I love how you guys trade. It makes sense. I'm a support and resistance trader, but in all honesty, this is how we should be trading long-term, as this is how exactly, my friend. You put it 100% on point. Is that when I take off these drawings and I zoom out at the chart, I want to be a part of these massive plays over here. I don't want to be stuck in chasing 10, 15 pips. Is now when I open up gold here and I look at everything and I look at the gold chart, I can easily map out massive downside plays that have taken place over the past few weeks. And it doesn't take more than a few days for moves like this to happen. All you have to do is position yourself with the market, with the actual bias that market clearly breaks down to you. Hey guys, we're bearish in the day trading time frame because de-escalation is not complete. Escalations are continuously happening. We got stronger US labor data recently, which underpins on, right? The Fed rhetoric and market shifting from cuts to possible hikes. And then the headlines that are aligning with this. This is what we've built. We've built a platform unlike any other that guides you through the treacherous financial markets. You and I, we all know how hard it is to trade these financial markets. Now, if you already know it's hard, why wouldn't you want to have an edge? Why wouldn't you want to understand every piece of it? And it's like the analogy I've made several times, that if you're a brain surgeon and you don't understand the left or the right part of the brain, how can you call yourself a brain surgeon? No one's going to let you operate on them. It's the same thing with day trading. If you don't understand the financial side of the financial markets, you're just operating with your eyes closed. You're blind in the markets. You're not moving with pure efficiency, pure effectiveness. And in that case, you will not have the conviction to execute when time comes. What will end up happening is, let's say you took a position here, I did. You take a loss, that's it. Your conviction goes away with that loss, and then you won't know, hey, I need to look for shorts here. Instead, you'll end up chasing buys from here to here, which, cool, but is that really the type of trade I want to be taking in the next 10 years, 10 years down the line? No, I want to be taking a move down the line that's like, hey, I took this short going into the week. I knew NFP was going to come. If it came out hotter, I already aligned myself with the macro bias, which is bearish on gold. And guess what? Post NFP, I caught a massive 1 to 6, almost 3,000 pip move towards the downside, because all I did was execute when I needed to. I stepped up to the plate. I took the shorts where I needed to on a pullback on gold. I didn't get confused. I didn't get blindsided by these moves towards the upside, because I knew they were eventually going to get faded out. Just because you see this price action, this here, doesn't mean that now we're bullish, because that's what every ICT trader was looking for, and that's what every technical trader was just looking for. That doesn't mean we're bullish. It just means that, hey, we're just setting up for sells, man. We're setting up for these sells, and guess what? You got that massive outflow again. And guess what's going to happen again? Same shit day in, day out, using the same bias that we've talked about, riding the same sells, riding the same geopolitical escalations, de-escalations that are taking place. So this is a probabilistic game. This is all about probabilities. The probabilities of the sells playing out from 43.75 are higher than they are from here, because this is a better sell price, right? Buyers jumping in from 42.75 is higher than buyers trying to jump in from 4,300, because it's a lower buy price. It's a better price to buy at. It's a cheaper price, right? So it all comes down to that. It's how do we make sense of all this? And that's the platform we've built. And every single update, by the way, we update every single week. We push out updates every single week, and it's just getting better and better. So you use all this information, you see the breaking news coming in, you see what news is actually impacting. Like 33 minutes ago, Israeli military says incident ongoing, UN, all attacks must stop. You can see how it's just a back and forth. Some of it's just theatrics. UN saying all attacks must stop. Aren't you guys the United Nations? Weren't you made so things like this don't happen? So we remain united. See, this is a lot of it's theatrics, but then there are those headlines that come in that actually cause mass moves in the market, right? That cause these inflows, and we're able to scan them immediately and see, like you had this 4 days ago, where you had US interest rate futures raise odds of December rate hike, and then you can see across the board, gold took a nosedive, equities took nosedives, right? Any dollar pair continued towards the upside. So what does this tell you? This tells you that, hey, everything moves off of fundamentals, moves off of macroeconomics. And what I can do best is pay attention to this, and then use a platform like Market, which is easily going to help me understand, hey, since we're bearish, we can still pull back to 43.75. And in that case, I'm going to continue to look for sells, because that's what that means. But if sellers play out and I get those sells, I can ride them down to this target level. Once this gets hit, the next logical area would be the lows that we're looking to target. So this is how you take the entire macro picture and start to understand it. Like now, if I click this candle here on Market, one of the reasons we built this feature was because every time a trader sees a massive move, majority of the time, their monkey brain goes, ooh, what caused this, right? Now look how easy it is if I go to Market over here and I just click this candle. So I click this candle and it instantly tells me on gold, stronger than expected US May non-farm payrolls boosted Fed hike odds and the dollar. NFP 172 beat 85K consensus with positive prior revision signaling resilient labor market. Rate futures quickly priced in higher probability of December Fed rate hike after data. Gold was already under pressure on fading Middle East peace hopes before NFP leads. What did I tell you about? That's that positioning we were talking about, is that we're going to position ourselves before NFP. And look at the breakdown of this candle and how it played out. This is because we understand macro. We understand positioning in the markets. And in turn, we're able to build one of the most accurate financial market data platforms in existence. So thank you for that round of applause. That was perfect, actually. You can see the actual technicals that took place once we had these headlines come in and the data release of non-farm payrolls coming out at 172K, way hotter than the forecast of 85,000. And then you had that downflow. So whenever you see a big move, your mind instantly goes to, hey, what caused it? But you don't understand that it's driven by the story behind the scenes. There's so much going on that's going to drive it. So again, gold still in this range, man, not doing much. Like we're still over here, haven't gone above 50. We haven't seen sustained downside. It's just consolidating, which leads me to believe that we're more likely going to get this push towards the upside if in the next, let's say 30, 40 minutes, we don't see breaks toward the downside. I would like to see a push into the higher price points. ES, on the other hand, is still continuing from here. I don't have anything I'm looking for right now in terms of from these price points, because this is, you're inching up to this high again that we made yesterday, right? This price point. So nothing over here for me, but Kevin, is there anything you want to share?
Yeah, sure. Let's dive into that real quick.
Sure.
So,
I'll be right back. Just give me 1 minute.
yeah, for sure. Take nil out of there. So yesterday, guys, we were talking about the 7470. It was about 7465, 7477 area on ES. You guys remember, if you were here yesterday, how choppy in the morning we were on the S&P. There was really no trades. What I was telling you guys right over here around 10 o'clock, 10:15, before we were wrapping up the show at 10:30, is that this is a no trade zone. The only area I would consider taking any position on ES would be a short if we came back to this area of resistance again. Well, what happened? We came back up, a choppy rally higher. We started to hit a wall. We see markets started to see some absorption. So you guys can see that. Now, absorption is usually referring to some type of volume analysis, right? Where the buyers are beating the sellers, sellers are beating the buyers. Basically, what it's saying is that, let's say there were 400 buyers sitting right here. Markets are trying aggressively to push through with the 400 buyers, but there was a seller sitting there with 500 sells. Well, guess what? That 400 of the buying volume is not enough to break through that 500 sellers. So what happens is price starts to reverse. This would have been a very nice sign to take it on the breakdown. Stops above that recent high. Target just that pivot low. We're just looking to trade the range when markets are giving us range-bound price action, but it's important to be able to find those areas of support and resistance as well. So this was a great short opportunity, and it was also following a very strong move we had the day prior, right? This was Friday. We know NFP was Friday, and it gave us a 150 point, 170 point move on the S&P on the intraday scale. One of the biggest moves we've had in a long time. I'm pretty sure Friday was the biggest sell-off we had in 2026. So, when we talk about stats, we talk about markets, fundamentals, this is sort of a red flag. It's not like we pulled back a little bit, the biggest pullback of the month. It was the biggest pullback of the year, and we're 6 months in already. So we're starting to see a shift, and we're actually starting to see some uncertainty in the market, right? And that's where fear comes in. What we can also look at is the VIX, see where VIX is currently trading at. Now, it was elevated. It moved past 20. Since then, it has been able to make its way back lower. What I would really be looking for on the VIX is to see if it could break below this 1789 area. And if we can get below this, I would look for buyers on the ES. So look at that. We do our bull, we do our arrow. So if we could break this lower on the VIX, I'm looking for continuation on ES to the upside. At this point, because this has been an area that VIX actually reversed back higher from, I would be looking for ES comes into resistance, VIX comes into support. They're supposed to be divergent from each other. So if VIX finds support and moves higher, ES should find resistance and move lower. Another area I'm looking at, we have our volume profile here. We have a low volume shelf lining up with our VWAP. Let me get VWAP in there too. Indicators, VWAP. Perfect. We don't need those extra bands. We could delete those off. Band multiplier off. And we could also turn it off so it's not showing on the daily and all these other time frames. So we only see it when we're on the 5-minute time frame. Look at that, 15-minute, it's gone. 5-minute, it's there. VWAP lining up with that low volume area, value area low too. If I am looking for buyers today, this would be the ideal spot, 74.28, 74.30 area on the S&P. We could take a look at NASDAQ as well. And don't forget the fundamentals, right? Fundamentals have finally started to shift a little bearish. Now, NASDAQ has a similar setup. We have an extreme low volume shelf that's an imbalance. Markets hate imbalances. Well, we have high volume here. We fall off all the way down here, and we have high volume again over here. So this imbalance that lines up with VWAP, if we're trading the range and we're trading just the overall trend, and understanding that buyers at this point are struggling, then we want to buy the dip and sell the rip. So I would be looking for a pullback on NASDAQ here. We can take a look at our market terminal too. Now, we are still slightly bearish. NASDAQ eyes CPI and Fed path as AI boom meets chip export risks. Now, because we use market, we're aware that markets are waiting for CPI. Well, then we know that, hey, listen, yesterday's sideways price action It's probably very similar to what we had yesterday too. Yesterday, today, we're probably going to be getting that chop. In the lab, what do you think? And we're going to get chopped today, right? Just a bunch of sideways leading up to CPI.
Yeah, that's what markets are waiting for CPI print because we had hot jobs report. Now the focus comes on CPI because hot jobs report means that hey, resilient labor market is resilient. The Fed doesn't have to cut rates anytime soon.
Yep.
And in fact, the probabilities of a rate hike went up because fears of inflation remaining elevated are still high. And you can see with markets already forecasting an increase of inflation by 0.4%, right? They're forecasting it to go from 3.8 to 4.2. Now, that massive increase, you can see the risk that is associated with this print. If this print comes out higher than forecast within the minimum maximum, we're going to see continuation of that hawkish repricing happening, right? Odds of December rate hike right now are sitting at like 60%, right? So they're quite elevated. Unless we get a much softer print, then you would see something that's not expected by the markets, and in turn would give you more volatility.
Yep.
So
that'd be nice, but probably not.
Probably not, exactly, because the markets are currently pricing in the risk of elevated inflation remaining for a sustained period of time. That's why December rate hike odds have increased, and those are December 6 months down the line, right?
Yep.
So you can see how forward-looking markets are, where they're pricing that risk to remain elevated to the point where in December it's likely the Fed's going to have to hike, or that's what the market is currently pricing in. As we know, these rate expectations can sway based off of data reports, so that's why we watch them and then we see their impact. Earlier this year, there were at the end of last year, they were more in focus. And earlier this year, rate expectations lost their focus because the war came into play. With everything going on the war front and how it's causing elevated oil prices, plus trickling its way down into CPI, you can now see how the focus is coming slowly but surely back onto rate expectations. And that's what it is. The market's always focused on a few things at once, and sometimes certain things outweigh others for a period of time, just like how the war has been the main driver up until now, plus it continues to be, and now we see the focus of rate expectations coming more into focus as this, one of the key focuses of the war, bleeds into the inflation problem and bleeds and affects how the Fed approaches their policy going forward. So the next meeting is just in 9 days, I think, 9 days or 8 days.
Yeah,
and that's going to be Kevin Warsh's new meeting. Powell is still on the board, right? That's what we have to keep in mind. Powell isn't gone. Powell is still on the board. And that's the thing, is that Kevin Warsh 100% respects Jerome Powell more than he respects Trump. And he's 100% going to listen to what the Fed committee says and what Powell says over what Trump is pressuring him to do. So nothing's really going to change. If it came down to them holding rates or even hiking, that's exactly what they're going to do. And then you're going to see that pricing in over equities, over gold, over dollar, and just over global financial markets if we were to continue to price in a deeper hawkish positioning stance for the Federal Reserve's monetary policy. And then in that case, you know that gold doesn't thrive in a higher rate environment. That's why we continue to see those outflows, because gold doesn't thrive in higher rates. Neither does equities. Equities don't thrive in higher rates. But guess what thrives in a higher rate environment? Dollar. Dollar does, right? That's why you see dollar continued upside. You see dollar holding its bid because that's what the markets are pricing in. The markets are pricing in a stronger dollar due to rate hike potentials down the line, and not even like next year, like this year.
Right.
Yeah. So so it's like that's where equities currently are, is that I'm not really looking for anything unless we can reach some of these price points, and then I would like to test out those buys. I'm gonna have Powell's poster up, Washington on the funny.
You can put like a cutout of Powell's head on the video.
Yeah, a little shrine, a Powell shrine. That's
Powell
what
shrine.
Right?
Powell, please lead us down the right Fed path.
Yeah, please, sir. Please give us signals. Please wear a bow tie if you're going to cut rates, please.
Yeah, right.
Purple bow tie if you're going to cut rates. Green if you're going to hike. Surprise hike.
Yep.
But yeah, this is so With gold, guys, the way that gold currently is, I'm going to be entirely honest. I'm not a big fan of this right now. The reason
Yeah.
I say this is because, yes, this area is currently holding, right? But we've been in this area for so long that if sellers really cannot dominate here going into the next hour, I'm likely this scenario is going to play out where we tap into 43.75, which is what we want, right? We want that, when you start seeing that excess one-sided volatility come in the opposite direction of what you're trying to look for, that's when oh, I need to be looking for an entry now. Like when over here, people, I bet you there's people trying to sell at this high on gold right here, this minor high that was created. And then these massive candles came in just to grab liquidity from a better price point. Now, if we see something similar and this area doesn't hold, then boom, guess where we're going to execute shorts, wherever the opportunity is given to us. So when we start consolidating in an area for so long, yes, this could hold and we could head towards the downside, and then you just see plays below here, right? But the better opportunity would be to go up to here and then make our way down in a better manner. So that's why I'm like, okay, if we've been here for so long and we're not seeing much movement, consolidated conditions, if we don't start changing structure here, going from these higher lows like this sort of movement to now, then we're just going to continue to push up. And that's fine because I'll look for those shorts. Otherwise, the plays from here are still in from like yesterday here, right? So nothing here. I wouldn't look to take a short here now. But if you were in from the intraday period, then it's like you might as well hold it, right? You might as well continue to hold it in case it plays out now, since we've respected this area so many times. But in case it doesn't, mentally prepare yourself for this part.
Yep. Let's see. Somebody's got a question in the lab. How did you make the transition from how you traded before to how you trade now? What advice would you give someone who wants to make that same transition?
Yeah. So one of the biggest things is the idea that it's not about timing the market, it's about time in the market. And that's a big concept when you're looking at the markets and you're forecasting them for the next few days, for the next few weeks, and how it could play out. Because moves sometimes will not, like you can see this high that was created over here on May 29th, we didn't fill it until June 5th. It took over 6 days for us to come back down to these lows. It took an entire week to come back down to these lows. So if you're into shorts here, your expectation shouldn't be that in the next daily period we reach back down to here. Your expectation should be, hey, I know it's going to be even slower to get to my take profit than it did to pull back. And that's how the markets move. The pullback period, the consolidation is always going to be such a pain. And the greater pain sometimes is that controlled downside but you use it to your advantage, which that if the structure maintains, then I'm just going to continue riding these down. So it's expanding your time horizon. The market doesn't have to move when you want it to move. Did the market move for me now? It still hasn't, dude. I've been in this position since yesterday, 12 p.m. Sorry, from yesterday, from these highs, right? And now 24 hours later, I'm basically at break even, right? So it's like I didn't expect this, but I knew that, okay, as long as this holds, I'm fine. Like as long as this area holds, my expectation isn't that this just dumps all of a sudden. I know that, hey, there's so many other areas in here that may stop it from continuing towards the downside, and I may need to be patient before we see that range fill towards the downside. So now, when I know this, I can let go of that expectation. You know how they say in life, in everything in life, don't have any expectations, because you're just going to, like, if you have expectations from someone and they don't live up to it, you're just going to be pissed, right?
Yep.
So it's the same thing in the markets. If you have expectations that, hey, the trade's going to play out in the next 5 minutes and it doesn't, guess what? Now you're going to get antsy. You're going to start to lose conviction in the play. But if I put my expectation as, hey, I'm just looking at this price point. As long as it holds, the bias holds, nothing changes on the macro front, I don't get anything on a flip watch that's really holding weight, then I can continue to let this trade play out. And I'm not going to lose that conviction because I set some false timing expectations. Right. Also, on the other side of things is that you got to let go of chasing moves. chasing moves such as like most people, what they'll do is that if they're not positioned for these sells or if they're waiting for the sells up here, they'll just look for buys, trying to get the breakout buys. Now, guess what you're doing? You're chasing. If you look for breakout buys from here, guess where you're buying? You're buying from the most recent high that's occurred in the past 2 days. Price hasn't been to 43.52 since Friday. Now, if you start buying here, guess what? You're buying at the most weekly high. You bought at a weekly high right now. This is this week's high at that point. Now, that's not likely, and you're going to end up maybe catching a few pips, but that's not a trade that's long-term sustainable. Is that a trade you would repeat 1,000 times? No. Is this a trade you'd repeat 1,000 times? Taking a sell on a high? Absolutely. Or taking a buy on a low? Absolutely. That's a trade I'll repeat 1,000 times. Is something like taking sells from down here to down here something I'd repeat 1,000 times? No, it wouldn't. It's not. Maybe it's something I can take advantage of, but would I really want to be scalping these sells to the lows after we have just dropped so long on an intraday period? No, I'd rather take the sells from this high or over here, because then my probabilities are increased and I can really then relax and chill and let the intraday trade play out. Because if your risk is 1%, then you know that, okay, I'm good. As long as if I get stopped out, I get stopped out, I lose 1%, but at least I can make 6% on the downside.
There we go.
It's currently on the web. We have an app coming out in the next month and a half. So we're in final stages of development of it. And then we just have to get it approved by Apple. So it'll be coming on mobile. But the mobile version on the web is completely usable. It has a full web interface. It has a full mobile interface. It has a dock navigation. So you can check it out on app.marketedge.ai. You can sign up, create an account, get a subscription, and then you'll be able to use it on the mobile. And what we do is that what I love to do actually is I save the web app on my mobile screen, on my home screen. So what ends up happening is that it stays on my home screen and it opens up as a progressive web app on my phone. I don't know if you can see because of the blur, but it opens up as a full app on my phone. Right. And then I'm able to just look at it, open up market, and navigate it with the dock navigation. Exactly. You can download the link to your home screen. Yeah. And it's basically just like an app, and you can enable notifications. So you'll get alerts for high impact, for breaking news right to your mobile device across any phone. And then you have the official Android and iOS apps coming very soon, guys. So lots coming. We just released this TradingView integration, which you can go to the link that Kevin said. Kevin linked in the description, and he'll send it again. Market AI live news and events. It hasn't been indexed yet on the search for Google Web Chrome, so that takes about a day or two. But you can go to that link, and we'll make announcements. We'll put it on the platform. So lots coming. Yeah, thank you again, Kevin.
For sure. Guys, definitely, take advantage of it, man. It's got to be the best platform I've ever seen. And really does give you guys an edge that every trader should take advantage of. Forget a Bloomberg terminal for 25 to 30,000 a year. Forget sitting in front of CNBC or whatever channel you watch for your news for an hour to try to figure out what's going on. You could download Market, run through the breaking news, run through the high impacts and the supporting your daily bias, and do that in 2 minutes and be ready for the day.
Yep, exactly. You can click the brain icon here. You can get the playbook for CPI. Yeah. You can click on gold. You can see what it means for gold as well. Like, we know that if we come above the maximum or even above like 4.25, which is above the forecast, that we know we're going to get a bearish gold, because that means higher CPI, higher rates for longer, and that means lower demand for gold. And gold doesn't thrive in a higher rate environment, right? So higher CPI likely support USD and yields. Lower CPI would pressure both. So see, this is what I mean. So you can do the same on ES as well. It's the same on ES. Higher CPI is bearish on ES, on equities, because equities don't thrive in a higher rate environment. They thrive in a lower rate environment. That's why when markets are front running rate cuts, you see that controlled upside movement happening on equities. You see the markets front running rate cuts. And it's the same thing as like when Fed was pumping the markets right here, QE, low rate environment, you can see us reaching all-time highs after tapping 2200s on S&P. So same thing, right? It's same sort of philosophies. That's what we want to do best, is that when we come to the charts, you should know that there's a story being told and there's things that are happening in your session that are going to influence and impact the price of the market you trade. For all I care, you could be trading lean hog futures, and we have that available on market for you to break down, for us to break down, give you target levels, give you a bias, give you a news feed that's up to date, that's faster than any news feed. We have full platform wide translations. So if you're a Spanish trader, you'll have full Spanish translations where even the news headlines as they come in come fully translated in Spanish. So you can see all the headlines are Spanish. Everything you click is in Spanish. Everything you read is in Spanish. Things you want to go see, you want to go to a different page. Perfect. Guess what? That also gets translated to Spanish. You'll see this gets completely translated to Spanish. And that's why we have such a massive audience across the world, because we listen to them. We understand that, hey, not everybody's a native English speaker, and then not everybody can keep track of all these news. So guess what? We're going to give them translations. Plus, we're going to break it down into more of the breaking news and the actual high impact news, which is all the news that actually impacts financial markets and across the board. Yeah. So like exactly, the min-max ranges are elite for gauging volatility, as Seb TFX in the chat said right here. Thank you for an amazing point right here, where this is so important for gauging volatility, because when we exceed these and we don't fall within the minimum and maximum range, that's when you get excess volatility. And a great example of that was Friday's job data. So now when I go back to Friday and we look at NFP, you can see NFP over here. The minimum was 50,000, maximum was 125K. So all what retail saw in this case was the forecast 85 and the prior. They didn't realize the minimum was 50 and the maximum being 125. So the volatility didn't come from us smashing the 85K target. It came from us breaking past the maximum expectation that the institutions had. The institutions were looking at a maximum number of 125,000 jobs created in the month of May for non-farm payrolls. And we got 172. And you see this fire icon here, it says outside expected range, higher volatility likely. Exactly. If we had come out at 110K, that movement would not have happened. That impact was not as likely to happen, because we're still within the maximum. And that's the same principle for CPI, is that if CPI comes out elevated, let's say it comes out at 4.1, it's below the forecast, but it's still at the minimum. Or if it comes out 4.3, it's still at the maximum. Yes, it's above the forecast, but it's still contained within the maximum expectations that institutions have. Now, if we come 4.4, 4.35 higher, now that's something the markets aren't expecting. Now, if we come out 4% or 3.9, yes, it's an increase on prior, but it's a complete miss of the minimum expectation, which holds more weight than missing the forecast. And that's where retail pays attention to. Retail pays attention to prior and forecast, not the fact that there's an entire range on the outside of it that institutions are actually looking out for. So gold, guys, that trade is playing out. I don't know how much it's going to play out. Maybe we just consolidate here for a bit and push later into the session. So we had 5 headlines come out.
It's New York session opening in a couple seconds here.
Yep.
We're already at our previous day high on ES and NQ.
Yep. Thank you.
For sure.
For such hosting these into the new hour, Kevin. Like it's been great with having 250 people watching across the board on X, on YouTube. So lots and lots of people have been joining in, and we've been getting great feedback from people. If I can ask for a quick favor, please go leave us a review. I'm going to send you a link here. Drop us a review. People absolutely have been giving us great feedback on where we can improve, and we love to hear it. So I'll drop the link here for Kevin in our private chat. He can send it to you.
Yeah, send that over.
Leave us a review if you use market. We love to hear your feedback. And yeah, we continue to build a product that you guys want. A lot of these things people have been telling us they wanted. People have told us, hey, do you have a trading view integration? And we wanted to do it right. And we think this is the best way to do it, is that you have it right on trading view. You have your market icon here. You can drag it anywhere, click it open it up, have the calendar, you have your live news feed when you need to go back to market, to refer for the bias, to refer for any changes, to flip watch or any updates to the annotations, charting, your overall full calendar, and the rest of the functionalities. You can go to it. But you might, if you stay on TradingView, mainly perfect. Now you have an integration that completely gets into your workflow and that you don't have to go hunting for information.
Yep. Awesome, man. Guys, such a platform. Go drop a like, go give us a like, share with your friends, share to social media, the Market in the Morning show. And of course, fill out that Trustpilot review. Give us a nice 5-star, give us some feedback, your favorite parts about market, and why other people should be using it too.
Yeah. Kevin, you want to share your screen for a bit?
Absolutely, bro. For sure. Yeah, so NASDAQ right off the bat, sort of the similar price action we've been seeing lately, where it's like, boom, market's open, NASDAQ just sells off. I'd really like to see us try to find support down near 29,560. This marked out from the pre-market. We've got a small pivot low over here I'd like to see us sweep as well. So really just looking to trade the range, right? We're not looking for, oh, give us a big breakdown move right here. Let's sell off another 500-600 points today. We don't have that catalyst today. We don't have news. We don't have an economic event that's going to give us that big move. We do tomorrow, right? CPI, just like Seb mentioned, and the lab was covering too. If we break outside of that range of CPI of the minimum and maximum, then yeah, guess what? We're going to get some momentum and volatility in the market. We're going to be able to, first, we should size down a little bit because of the extra volatility, but we're going to be able to capitalize knowing that we're expecting a much bigger move. Something else to note, since we're talking about volatility in the market, look at the range we're getting on some of these candles. If you trade the NASDAQ, this first 5 minute of the day, and it's not even closed yet, it's got a minute 42 left, has already shown us 80 points in a 5-minute candle on NQ. This is wild, right? This is not a trading environment where you would want to have like a 10-point stop loss, a 15-point stop loss. If you do that, you're just asking to get stopped out 1,000 times.
Yeah, exactly. You want to execute at levels that make sense.
Like, yep, execute at levels
on U.S. equities at the start of the week, right? These types of trades make so much more sense than trying to get buys on NASDAQ at open when it's after it's already pushed up 1,000 points over the past 2 days.
Yeah.
Right. Like you're not at a point where you're looking for those buys on NASDAQ, is that you're looking to get that retracement to a better key price area where now you can look to enter buys.
Exactly.
Right? That's the same thing we did on ES, is that you got that tap on NASDAQ of that demand at 28,700, right? Like that came in on NQ. And then guess what? That's the low that was created. Maybe the next opportunity wasn't until 29,300, where you had the overnight Monday Asian session during market open, NASDAQ created a new higher low before pushing up into these highs at 29,800. So now you're not looking for those buys. You're looking to see where can NASDAQ go into before buyers try to test it. So now whether that is 29,300 again, because that's where we previously saw price buyers jump in and drive it back up to 29,800, or maybe it's lower. But the point is that we're not really looking to buy right at open. We're not looking to buy while NASDAQ is in the middle of a range, setting up and just really whipsawing. The point is it's time in the market, right? You're not trying to time it. Like you're not just trying to time it all the time. Like here, it would make sense that imagine if NASDAQ dropped to a major support after market open and sellers start fading out, buyers start jumping in, boom. Now that's an area we're looking for buys. Exactly. If you're to come something like that, now that's an area we're looking for clean buys. And that lines up with the previous area where buyers jumped in, created that higher low, and now you have an increase in probability. But if I try to buy from where NASDAQ currently is right now, my upside is a bit more capped, and I don't want to be buying into a move after 1,000 point upside since just
Yep.
end of Friday, right? Nasdaq low was printed on Sunday market open, and since then we have pushed up 1,000 points.
Yeah.
So do you really want to buy after 1,000 point push up?
No
Or
way.
would you rather wait for a higher low or retest of a known demand area and then jump into those buys and have that increased probability of this playing out to be a massive intraday play rather than stressing yourself out for a few points on NASDAQ right at open using opening range breakout or something like that? You know what I mean?
Yeah.
You have to play the markets like a player and not get played by the markets.
Very good.
Stop getting played by the markets and actually play the game. You're only going to win if you play the game. And that means understanding it to the core, understanding market psychology, understanding that, hey, maybe it doesn't make sense if I try to buy NASDAQ from here, because where am I going to put my stop loss? Below this intraday low here?
Right.
You know,
Yeah.
where,
Now,
right? Where are you going to put it? Right below 29,300, because it could come down to there. What's stopping NASDAQ from coming down to 29,300
have a
before
nice
buyers
chat.
jump in, right? Yeah. So keep that in mind, is that maybe it's not worth my time to execute buys at these highs right now just to squeeze out a few pips. Maybe
Yeah.
that's not the type of trade I want to be taking 10 years down the line when I'm the best trader, best trading version of myself.
Exactly.
That's what you want to align yourself with, right? I got this advice years ago, is that if you had 100 trades, would this be one of them that you're taking? It personally wouldn't for me. It wouldn't be, right? But on gold, if I'm looking for those sells at 43.75 or I think that's 4,400 on GC, 4,400. Yeah,
Yes, sir. 4,400 right
4,400 on
away.
GC. Now that's a trade I would happily take 1,000 times, because
Yeah.
that has sustained downside. I have enough downside. I have a good risk reward, clean stop loss placement, and that could go straight down to those intraday lows, right at the lows at 4,300.
Yep.
Now, when I look at that, wow, that gives me so much more potential to ride that and higher probability.
Yep. Exactly. Exactly. Versus a level that we've sort of been trading on, that we've been failing to move from.
Yeah. And now
Yeah.
same with ES, right? Same with
Yep.
ES. I'm not looking to buy at this high that we're retesting the same high from yesterday. Is that the buys were overnight. They happened yesterday during Asian hours where you had the higher low created and then buyers jump back in until we get a retracement or some sort of high printed and then a higher low. We're not really looking to jump into these buys right at the highs over here.
Yeah. Yeah. If anything, guys, right, this is a similar area from yesterday. Sellers took control at this point. Not only did they take control yesterday, Monday, but this is also our last consolidation area where buyers tried and failed on Friday, which again resulted in, on the S&P, another 100-point move to the downside. Yesterday, it gave us a 40-point move to the downside. At this point, I really wouldn't be so quick to jump in shorts right away. I'd let markets react to this level, but just remember, we're trading the range. If we see that we're range bound, we should not be trying to take breakout trades. We cannot be like, oh, this is the one. This is going to be the real breakout this time. Absolutely not. We have to read what the markets are telling us and take advantage of that. NASDAQ rejecting lower, ES trying to push higher, but ES is in a resistance point. We leave it alone. VIX is below that level I was looking at before, but like I mentioned, if we react below it and then trade back higher again, there's no way we're looking for shorts. This is a higher VIX brings uncertainty and higher volatility to the markets.
Yeah.
Let's see. Look at that. ES struggling. NASDAQ trying to make its way back towards VWAP. Oil has also been in a very tough position. It's been struggling to break back below 87. So it's really just a push-pull right now with the markets, and a lot of them are almost anticipating that CPI data, so they're not giving us that follow-through.
Mm-hmm. Yep. And the same thing with
Lab in the extension. Let's see.
yeah, just the news feed right now.
Cool.
News feed and calendar.
Awesome, bro. But listen, man, honestly, when you're trading and you're using market on your trading view, that's sort of all you need in a sense of what's emergency, what's super important right now. The bias and everything, that you could just check the market terminal itself. Always recommend doing that as part of your pre-market routine. You should never just wake up and jump on charts. You want to wake up, sort of grab your cup of coffee, get a routine going, then hit the charts, but not hit the charts to trade right away. Hit the charts to go over your levels you've gone over. Have a pre-market routine. Build consistency. You build a routine, consistency will follow. Since 43.75 on GC has been holding, what catalyst would we need to break 43.75 and go up to either 44.20 or even 44.50 area prior to continuing its drop? Absolutely, yeah. Always happy to help with the valuable info. In my opinion, where are we on gold? Yeah, gold's really trying to make its way back lower at this point, still rejecting this area that Nilab has mentioned. I would still also just be bearish on gold below this 44.69, 44.70. Cool CPI would be nice, but doubt that's going to happen. Oil has stayed high for too long. Energy prices are higher. Everything is just very high in price right now. Inflation's most likely not going to come in cooler than expected, especially since they are already, where was that? They're anticipating inflation to be higher than prior month too. So it's definitely a very difficult economy right now. We do have existing home sales at 10 o'clock, which is in 18 minutes. Not the biggest of events, really not going to give us that much of a move either. At this point, markets are really in a no trade zone. I wouldn't look for shorts on ES here, just like I wouldn't look for longs on NASDAQ here. Extremely rough market, no trade zone. We could take a look at our fundamentals one more time. And something else that sort of signals to us be careful on taking any type of trend trade on ES and NQ is we have our swing trading bias as slightly bullish. We have our day trading bias as slightly bearish. So things are starting to push and pull. Markets are trying their best to shift back to a more bearish market conditions. We've been extremely bullish since the ceasefire late March. March 31st is when markets really reversed on ES and NQ. Let's pull that up for a quick moment. Look at that. Since that 10% level, we moved up 20% on ES. We moved up, I want to say 30%. Yeah, over 33% on NASDAQ. Insanity. But yeah, I want to see how we react to our previous day high on ES, in my opinion, up here. We see that yesterday on Monday, we broke Friday's low and reversed higher. Well, then I would want to see if we could sort of get that opposite reaction on the buy side, right? Do we find that previous day high on ES and NQ and find a rejection lower? On NASDAQ, we had this very strong point on the hourly time frame. 10 o'clock to 11 o'clock on Friday. This was our last area that buyers tried to hold the market before the market gave us a huge move to the downside, 1,000 points on the NASDAQ on the intraday level. So I do want to see if we still have active selling participants in this range. We also know we want to sort of reverse psychology it, right? If I'm a retail trader and I see we're breaking out here, retail's going to be like, oh my God, we're breaking out. I got to take it long. Because they're not looking left. They're not looking left, and they're not looking at their fundamentals. They're just taking what they're seeing on the chart. So I'd want to see NASDAQ hold this supply area around 29,800. And I'd actually want to see ES break its own supply area, which ends around 74.77. So I'd want to see a sweep of 74.76 on ES and a reversal. NASDAQ hold this area and starts to reverse back lower too. Would look to target just near VWAP. Again, we're not looking for a massive trade today because we're range bound. But given the market environment, we could still shoot for like a 150-point move on the NASDAQ. VIX continuing lower though. We mentioned earlier that would be more of a bullish sentiment. Markets gaining back that momentum. I'd really want to see ES hold above its previous day high first. Like, show me some strength. NASDAQ did turn back around. Neil, what are you seeing on equities? Oh, you're muted. You're muted, G.
Sorry, I didn't.
That's right. We can do some sign language.
Yeah. We gotta. I've been in this on equities. I'm looking for the same thing. I've been in the same position since half of it on Friday, and then the other half on Sunday. And I've taken majority of my profits on this high yesterday when we were on stream, and I'm still holding the runners. So
Nice.
I'm still expecting upside, right? I'm positioned from over here. I didn't take anything else since then. I'm more of an intraday trader. If we were seeing a retracement and maybe we come down to a price point that better aligns with structure, like down here, right?
Yep.
Before we continue upside, that's what I want to see. I don't want to be buying at a high over here for this squeeze of this pips. Yeah.
Lost you.
Sorry, can you hear me now?
Yes, sir.
I don't know what just happened.
Your
So
walkie-talkie. You keep letting go of the button.
yeah, it's okay. So that's not what I'm looking. I'm not looking to get the highs and buy into this high over here for a quick squeeze. I'm looking to take these position plays, right? That I can position myself and really have the highest risk reward setup over here, right? Like look at this. This is a massive great play, 1 to 3. And then this one right now even is running 1 to 5.8 right now, almost 1 to 6 from my entry. Sorry, my stop loss was lower. My stop loss was here. So it's running a good 1 to 4 almost, right? With the intraday stop loss being below here and then we're letting this trade run, it's running, it's soaring right now. But now when I'm looking at it for my next trade, I don't want to be chasing and buying into this high if I'm not positioned. Like the main positioning overnight happened over here. That's not, you can't argue that. That's not, can't be stated. The main buying took place here. Now, if I'm looking for buys, that's where I want to be looking at. I don't want to be buying into this session at these highs. Yeah, it depends on what type of trader you are. But when you're asking an intraday trader, I'm not really looking to wait for a 1 minute candle, close above here and take these 10 points. Yeah, cool. Beneficial for some, but not for me, right? Yeah. I'm not looking for that. If I'm positioned from the best place possible on these buys, why would I then look to take the shittier trade up here? I'm looking for then now to go back to the intraday time frame, see, okay, you know what? We're seeing a shift in structure. We're seeing structure go from a pullback phase to now holding above here, higher low, break above this high. And guess what's going to happen? Eventually, there will be a time where we create a high, come retrace. Wherever we retrace to, we create that higher low. That's where I want to buy. That's where I want to continue the change in structure. And then slowly but surely, we end up making our way back near all-time highs. And that's because markets are delusionally optimistic that this sort of move, you can see we have already almost corrected 60% of that move now.
Yeah.
So that's what I'm looking for. On gold, like we were talking about, if that area didn't hold, we're going to see that push happen back into it, right? So gold is continuing to push up. We got a rebound off those lows again, as I mentioned. Now we're gonna watch for those sells over here. Let's go. This is where we start watching. This is where the main mean potatoes start playing out, ladies and gentlemen. This is where the fireworks potentially start to happening. This is the setup we've been talking about since the start of the session, right? We've talked about being able to take this position if this plays out as we head up into 43.75. Now, as we head up into here, what we're going to watch out for is a potential rejection of where price starts creating those highs. And it could be very similar to something that we've previously seen happen over the course of the intraday period, where we see, let's say we go back to here, where you see a quick reaction, then you see price action set up, double top, and then we see confirmations of sellers jump in. So right now, all we are seeing is that price is breaking above these highs because sellers were not able to sustain this price and really drive price down. Now, you could either have a limit waiting, as some people do, or you can watch 1 minute price action to see how close we can get to that price point. Now, if we start closing back below here, maybe we do something like this. We maintain below 43.50 and we get those sells after wiping out this liquidity, right? And that's just as valid if we get the correct price action. Otherwise, if we see a push back up into here, then you can see how we react to the 70s and 80s. But this is key information right now, so we'll continue to monitor. But keep that in mind, is that if we see that downside play out and market starts closing something like this after coming up here and then starts closing, either that happens and we get like sellers trying to jump in from here after this whipsaw, right? Or we just see price continue up and then we'll see where it tops off near the 70s. But right now, we did break back below. So you could watch and see how price reacts, whether we retest this area and quickly we're able to get some sort of continuation. Because if we start holding below 43.50s now, then that tells you, okay, sellers, okay, that was a quick wipeout, and maybe that this could play out too, which gives you enough upside and downside that, okay, maybe we continue towards the downside. If only if you see lower time frame price action now maintaining back below this range level over here that we have labeled out. Otherwise, you're still paying attention to how price could react at these 70s, which is that main intraday play. But this is what's adapting is about, is that, okay, we saw a push towards upside. Now, if and only if we start seeing lower time frame price action start to stop and not be able to break back above here, or maybe even if we get, since this is our initial reaction, if we even push up into here and then go down, then you know that's short. That you know that since we're maintaining below here, it's a good area for me to potentially attempt to short, given that we maintain below 43.50. If we can't, and then we start heading back up, then you manage your play and you're like, okay, I can now look for those sells at 43.75. But either way, it's understanding the price psychology, the anatomy that, hey, price just pushed into here. This might have been our liquidity move, where as soon as we pushed above, the next candle instantly pushed down. And the one after that, we closed right back below this range, that we basically canceled out this lower time frame play. Now, if we start to get closures below here, especially going into this new hourly candle and closing this hourly candle, then you know that we could get that push towards the downside and then see these levels come one by one. And this is how you break down from a trade idea, from what's happening here to where we can push into. If we don't reach that level, if we come close to it, what else can we look out for? Which is then the short play that we're talking about as price continues to close below here and little by little cancels out this move. Now, if this move gets fully canceled out, guess where we're going? 43.07, and we break below here, 43.25, we're going to 43.07s, lower 4300s. Does that make sense?
Yep. Great breakdown.
Does that make sense? How we had a quick push towards the upside, and this might have just been that liquidity play to take out those sellers from here over the course of the past day. And now that if we start closing below here, it gives us enough validation to, if we remain below 43.50s, to execute sells and hold those sells for more of an intraday period than maybe going into CPI tomorrow that would correctly position from here.
Yep. Looks good, bro. Looks good, man. Guys, make sure you run that like button up, man. We're doing this every day. So show some support, show some love. And of course, you guys can watch it on the Market TV section of your Market AI terminal too.
Yep. So we'll watch this, how this 5-minute closes, but this is what I mean. It's very important to understand how markets can play out when your price point isn't met. We're looking for 75. We reached 63, and I talked about this before. There's not much of a difference when it comes to these price points. It's near that price point. We're near it, right? So now I tapped it. Now I'm closing back below this range. I'm snapping back below it. If I get a retest, or if I see price action closing below, it calls for me to be comfortable in taking sells with the market bias, which is slightly bearish here. And guess what? On an intraday period, it just looks like a wick where we wicked up, created a lower high, and now we're looking to push down. So that's what it's about. And I hope people, like, did somebody actually execute on any of these sells? Anybody take them? Drop a if you took them, drop a like, man, or drop a like, let us know. Because if these play out, it's a great play. And I'm always fully transparent. So I was telling you guys, hey, if we start closing below here, this is a good place to look for those sells. And like right there, as soon as we started closing below, I was able to take these sells. And that's just based off of conviction, because we had it mapped out that either from this price point, from 50s or from 75s. The fact is that we broke above 50s, got near 75s. As soon as we started closing below, that tells you sellers are dominant. Sellers are in control. Now it's time for me to execute short. Now, guess what? If I'm in these shorts here and I'm currently floating 170 pips, guess what happens if I get stopped out? Oh fucking well. I'm going to look for shorts up here. Maybe that's the price point that needs to be met. and maybe we'll retest this again. Maybe we'll do a double top before continuing down. But the point is that I'm at the batting plate, and I'm ready to swing the bat, and I'm ready to put my balls on the line. I'm ready to put money on the line and take the risk. That's what it's about. Life's about taking risks. If your opportunity presents and you fail to take a risk, guess what's going to happen? You're never going to reap the rewards.
Right.
You're never going to reap the rewards. And just in a matter of a few minutes, when I said, hey guys, it's the fireworks, we started watching it. We saw this candle closure. I said, keep in mind, if we close back below 43.50s and maintain below it, we're probably going to see that downside risk come into play on gold. And we're going to take those shorts from here.
Awesome, bro. Awesome. And guys, NASDAQ and ES also, same setup I was just calling out too. Swept previous day high on ES, closed back below it, rejected in the supply area on NASDAQ, now pushing below it. This is about 80 points already in profit from that area I would have looked to enter. I didn't want to interrupt Nalab. Nalab's spitting knowledge and facts over here. I could never interrupt, but we did give you guys this setup. What's that? 2 setups now, NASDAQ and gold today. Very good, very good. I do think NASDAQ will make its way towards 29,590. It's going to be another 120 points from where we are right now. Look at that selling pressure. Keep an eye on our equities. My biggest concern equity-wise is Microsoft trying to hold up, but Microsoft really has been a lagger lately. Apple new low of day. Nvidia's trying to dump to new low of day. Amazon's sort of weak. Google sidestepping, not doing much. Meta trying to hold too. For the most part, look at that weakness on our NASDAQ and equities. Yes, sir, guys. Hit that like button. Come on now. Seb, 250 pips in 10 minutes. Come on. Come on.
On gold, this is floating out 250 pips, 260 pips. We're going to get the 300, 400 pip mark on this trade. As soon as we break below 43.25, expect further downside to 4300s. And that's where we'll look to secure some more partials. But this is a good area to secure partials because this is the previous area where we had a bit of buying pressure come in. So it wouldn't be out of ordinary if we see lower time frame reject this area, come back, retest 43.50s before we see further sell side sellers jump in, because that's also possible, right? Like, let's say something like this plays out. Oh, where did my drawing tools go? So let's say something like this plays out where you have, does that change our target? No, it doesn't, right? It just means that it may take longer, but the fact is that, hey, we got more information now. The information we got now in this session was that we pushed into higher price points above 50s, but sellers dominated. Sellers jumped back in. Now that gives us more information than previously, because previously we had sellers at 43.50s holding. They got taken out. The sellers jumped in before price even got to 43.75. So you know that the seller up here is also fat. It's massive. Yeah. A big seller up here. Now, it's a good spot to secure. And then you could get something like this that plays out over the course of the intraday period. So if you're a scalper, fantastic, secure. You've just caught 250 pips. You caught a $25 move on gold, right? Depending on your position size, that could either be thousands of dollars, it could be hundreds of dollars. Now, if you're an intraday trader, now look at how that positioning ends up looking. If we start taking out these lower 43.15 areas, then you have 4,300, and then you make your way eventually down to the lows. If that's how the intraday positioning ends up playing out. So now, if you end up seeing this, and you end up seeing respecting of 43.50, you know, you have higher conviction that, hey, I don't need to wait for 43.75 to hit. I can look for sells below 43.50, and that's the level of decision making that it takes to excel in the market, to understand that, hey, this is a push. Now look at this is what I was mentioning to you guys. Don't look for breakout buys, because look what happened. Those breakout buyers, you know, retail entered when this 1 minute candle closed above here looking for buys, and guess what? 2 minutes later, they're completely out of the trade. That's not the side you want to be on. You want to be aligned with the macro. You want to be aligned with fundamentals. You know our pullback areas up to here that we'll need to get through 43.05 before we even make our way down to the intraday lows. So if you know this information, it becomes way easier to execute when moves like this are happening in the market, where you see quick volatility towards the upside and then it gets faded out. And as soon as it gets faded out, then we can execute those shorts.
Yep.
So that was a quick W on the gold trade that we called out. Yeah, open range breakout got clapped.
Bro, clapped so bad.
So exactly as how Seb said, he mentioned that this is a good area to take profit because, guys, although this is playing out right now, nothing stops the market from doing this.
That's right. Continuing to range. We still break down.
Nothing stops it. Yes, we are currently below here, and yes, we're positioned, but nothing's going to stop it from then breaking and maybe retesting that area again. You know what I mean?
Yep. Same with NASDAQ, man. NASDAQ, ES, gold, all sort of not duplicating or replicating each other's price action, but showing the same type of range where buyers look like they're stepping in on a breakout just for sellers to step in, knock it back down towards the support area. Support area gets our reaction back higher, stops shorts out. And then guess what? Once it looks like buyers are taking it higher, we're probably going to see a reversal again back to the downside. So great spotting the highs and lows of the range, good trading it, knowing where to take profit and being patient on our entries and exits. Really good stuff today, guys.
Really good stuff, even on like being able to adapt when your price point isn't met and being able to execute. So that was a quick scalp call now for 250 pips. And now what we wait for is whether this turns into an intraday play, whether we push back into this price point, reject it, set up for the next period, or as I was mentioning, whether we just get that play straight back from these lows up into 43.75, and then we see that downside. But the point is that today's a day where we need to be a bit more patient because we see these ranging happening across the board on gold. We see equities at these highs and tapping into higher price points after creating a higher low. So it's not really something that we're necessarily looking to jump into. Like, this is what I mean. Breaks above this area. Those breakout buyers got clapped. Like, this is why you shouldn't be chasing these breaks and break and retest. You should think about markets in terms of positioning. How can I position myself so I can get the best possible move? And the positioning didn't take place here on equities. It took place down here, right? On gold, the positioning for sells didn't take place post NFP. The positioning took place before. And then the volatility rushed in, and CP and NFP and labor market data was a catalyst for it. Right. So U.S. Energy Secretary Wright says ship traffic through Strait of Hormuz is rising very meaningfully. U.S. Energy Secretary, right? Ships, yeah.
Yeah, right.
Yeah, right, buddy.
Yeah, right.
Yeah, right, buddy. When's the next escalation, buddy? Let us know. We're in the gold shorts. When are we escalating things? No,
bro. We know when the next escalation will be. It's going to be when oil comes to the bottom of its range.
Yeah, as soon as oil taps $80 a barrel, guys, we're going to escalate and this shit's going to pop off.
Yeah, bro. People are going to be like, oh my God, oil's back below 80. We're bullish again. I knew the war was ending. And then Trump's going to come out. We're going to hit them harder than ever. And
we're going to blow them up.
We're going to blow them up. They're going to have no nukes. They escalated. Yeah, they escalated right to 104 in a single day. Oil's just going to go like, what would that be? Like 40% gain, 30% gain from that 80 to 104. But no, it will probably get a reaction down there, just like we've been getting reactions up here and down there.
Absolutely.
Right?
It's just market psychology, right? Like it's and human psychology too. These guys are they know that, listen, they're chess players and they play on the global stage. Okay.
Yep.
They're just bigger chess players and they're making these moves. They know that, hey, we're going to escalate things. We're going to go hard when oil is sitting at 80. Yep. So it's manipulation. It's all planned. It's just theatrics. The least we can do just take advantage of it in the markets. Like, use it to your advantage. Understand the game rather than getting played by the game. Stop complaining that Trump's stopping you out. Understand how you can take advantage of certain elements of how he works as a president.
Yep. Absolutely. Bro. Great call on gold today, man. You're like undefeated on gold in the market in the morning episodes, bro.
I appreciate it, man.
Yes, sir.
Yeah, man. It's you know what? This is the best part about it, is that markets are so hard to trade for a lot of people. And then when you come together as a community, you understand everything that's going on. You're able to bounce ideas. You're able to execute things together. It gives you much more confidence in the setups, in trading fundamentals, in using market, and it becomes easier and easier to navigate the financial markets by yourself, right? To
Yeah.
a point where maybe down the line you don't even have to join market in the morning, because so much we talk about, you've just absorbed a lot of it, and then you're able to catch a lot of these trades yourselves, which is what it's about. It turns context into clarity. It turns all this massive amounts of data that comes out into simplified flow for you to understand as a trader. Hey, I come to gold, I have a day trading bearish bias. I know I have a pullback area where price can pull back into before sellers jump in because of the bias. I have a target level of 43.05. These are what's supporting the current bias, with de-escalation being incomplete, with sporadic strikes in Lebanon, recent headlines from an hour ago as well, stronger jobs data, Fed rhetoric, right? All these things that play out where you have your levels over here. You come, you look at the bias, bearish levels. This is my target. This is where I could pull back into before sellers jump in, and where I can also look to take sells. And then everything that's impacting and influencing your bias.
Yep.
Now I'm prepared and ready to execute. And then I start mapping out potential entry points. And exactly as we mentioned, 43.75, that was basically met. Even on market's target level, 43.75 was the area. So that was basically hit. We adapted to it. As soon as we closed below, we executed the sells, and now we're waiting. Now we're waiting for the next bit of information to come in, which is price plus any headlines that come in over here on our extension. So when we have this open and it shows us that these headlines continuously get added to these bias factors, now we can start to see, okay, if I see a ton of headlines coming in here, wow, that means that this bias is holding weight, and I'm going to continue to ride these shorts. Maybe you even let the shorts run, and you let them run all the way to down all to these previous lows, rather than like 43.05, which is market's level, because you're more confident. You're like, you know what? I'm seeing that sustained price action. I'm seeing the volume volatility. I'm seeing sellers dominate, and headlines are all stacking towards this bias. So I have more conviction in holding those sells. And that's exactly how we were able to catch these monstrous sells from Tuesday, right? From Tuesday, we caught them from 45.15 all the way to new lows post NFP. That was a 2,000 pip sells that we called out here, and then 1,800 pips from here. So because we had that conviction and understanding, hey, this bias isn't going away anytime soon. In fact, it's just getting stronger, right? It's just getting stronger. These headlines that are coming out are just adding to it. And even with ES now, you saw that high get printed. And now guess what? Price is just going to come back, create a new higher low, and start maintaining this potential bullish structure we had. But again, that's what we were talking about, is that there's nothing stopping price from coming back down and creating that intraday low before edging higher over the next few days. Because the next key piece of information is actually CPI, and it's tomorrow. So that's important. This is how we position ourselves ahead of time. Maybe gold just ends up ranging. Maybe gold over here, I'm going to remove these, but maybe gold just ends up ranging until CPI. And guess what? Oh, well, like not much we can do about it, but at least we're positioned from here. At least we did our part, and we positioned ourselves, and we took the risk. We swung the bat when the ball came running towards us. All right. So
Dude, great. Let's point out too, if you want to know, why did oil move lower this past hour? What drove oil? Just come to your market terminal, click the candle. It's going to tell you what drove it, what was going on. De-escalation of Iran-Israel conflict and progress on Iran nuclear talks hit crude risk premium. Oil futures already under pressure as Iran-Israel halt attacks reduces supply disruption. So we know that if there's a supply disruption, price moves higher. If it's reducing supply disruption, does the opposite. Price moves lower. So we're able to figure it out. Price doesn't just move. Somebody mentioned before, turtle soup entries got cooked. Price doesn't move because of a turtle soup entry, or what's that other one? Like not the optimal trade, but like the unicorn trade or something.
Yeah, something like that.
It's like that doesn't move markets. Those are patterns. Patterns happen, right? Pattern day trading. It's in trading. There's going to be patterns that we recognize.
Yeah.
But it's when you line up the fundamentals, when you line up the key levels with your fundamentals, with the right buys, that's when those patterns actually work.
Yeah, 100%. On point.
Look at NASDAQ, bro.
NASDAQ, great call. Gold, great call, bro. We're just killing it. We're killing it. This is why you guys come to market in the mornings, all right? You come because you know we're gonna call out winning trades. Is that we're not gonna call it. We're not like some bum mentors who are just gonna call out shitty trades, have no understanding of what's actually going in the markets, and then they tell you, "Oh, my setup isn't working since the war started." Buddy, you just don't understand the financial market.
Yeah.
You don't understand how to trade when there's different things in focus. So if somebody tells you, "Yeah, guys, the markets aren't moving like they used to," no shit, bro. No. Do you think the markets are moving the same right now as they did in 1960s? No. You think Buffett is telling his investors, "Yeah, guys, markets aren't moving right." No, this guy's either sitting on cash or he has it all deployed. Like, you know what I mean? Someone like learn to see through the bullshit that you guys need to like pierce right through. People telling you that their setup doesn't work in this market is because they don't know how to trade the actual financial markets. Just because you have one setup and all you look for is that setup, it's not really an edge. What happens when that setup stops working? Or what happens when market conditions are so volatile that you completely are just getting slapped left and right? You're just going to be eating shit. You're going to be a feather in the wind. You're going to get blown around. You're going to get pushed around. And eventually you're going to land in a pile of shit.
Yep.
You don't want to be like that.
No. The model's not working.
The model's not working. You have pure model, buddy.
The market is the model, guys. And market conditions, like Nalab said, market conditions aren't the same now from now to 1999, just like they aren't the same now from where we are 3-4 months ago when we were selling off because of the Iran war. Market conditions are constantly rolling over. Things are constantly updating, whether it's Fed rate decision, Fed hike decision. Silver's rallying. You guys remember last year, silver had one of the biggest rallies in history where it just kept ripping and ripping. I saw every content creator trader in the world was trading silver when it was breaking above 70. And yeah, guess what? Any entry model, if you buy it, you're going to win. That was the market conditions we were dealing with. Now, you barely see anybody trading silver anymore. Why? Because market conditions changed and people hate to adjust. And those are the people that are not in it for the long run.
Yeah, absolutely. 100%.
Gold, beautiful, man. Continuing that drop. Let's see. NQ, I think NASDAQ was also trying to continue lower. Great sweep of previous day high. Great rejection to our supply that we had from Friday. Really great stuff. Look at that. Another bang right there. This is 260 points, 270 points from that area of resistance we had marked out from this morning, guys. That's why I also put so much emphasis on giving yourself the opportunity to take 10 minutes, 20 minutes before you take your trades, before your session opens, to do your analysis. Look at a higher time frame. When we're day trading, we're usually looking at a 5-minute, 15-minute, even possibly breaking it down to a 1 minute to see the reaction, but we should always be finding our levels on a higher time frame, whether it's the 15, the hourly, even just glancing at the daily time frame to look at the overall momentum in the market will also give you some insight. Yeah, exactly. Everybody makes money in good market conditions. You know, that's also something that separates the new traders and the traders that quit, right? Traders that quit are usually the ones that get into the markets when market conditions are good. They make the beginner's luck, they make money. And then all of a sudden, right? All of a sudden markets shift. Oh, I can't make money anymore. My strategy doesn't work. No, your strategy probably works fine. You might just have to adjust your entry and adjust your risk management based off of the changing market conditions.
Yeah. No, even ES is pulling back. Gold is fantastically breaking below that low. Kevin, if you mind sharing my screen.
True.
Amazing trade, guys. Fantastic trade. And we'll quickly just go over this. So 300 pips, take some profit, secure some position, secure your trade. And then now when we look at ES just did that pullback, just like Kevin's breaking down those sells from the top that he called, same on NQ. He's like, guys, don't be looking out for those buys. Same principle happened on ES. As soon as we close back below, those buyers got wiped out, you got that outflow of 40 points on ES. And now guess what's going to happen? Maybe we'll get a setup like this that plays out. You get that higher low formed in the intraday time frame, maybe from here, maybe from down here. But regardless, it happens. And then guess what? You're able to enter those buys alongside the trend over here of this shift in structure. So that's something for us to watch out for. And on gold, we're steadily making our way towards a downside target. Now, this is how you win a trade. Man, please, guys, throw a like, join market, drop us a review on Trustpilot. It really helps us out. We do this for free every single day, 2 hours a day. Kevin does it out of the kindness of his heart. I pay him in fruits. Kevin gets 4 watermelons a week. And he asked for it, actually. It wasn't even like I offered him money. He just asked for the watermelons. I was like, oh, cool, buddy. So we do this for free. Kevin does this for free, basically. And now, when we look at this. So now you see gold edging into here. Hey guys, why did you sell? We didn't say sell NASDAQ. We said that you could look for sells since the buys aren't logical here. Buys are not logical on NQ because you're buying into a high after 1,000-point move, right? So what's likely going to happen is you're going to get that pullback, and that pullback is going to come before we see further buyers jump into the market. And that's what's needed. You need this pullback condition before buyers jump in. Gold is actually, continuing to drop. Fantastic trade. But now when you're looking at NASDAQ, ES, like now you want to look for those buy setups, right? Going into these types of retracement is that if you come into this play now, into this zone, and you see buyers jump in and you see sellers exit, wow, that sets up a great risk reward for me to now take advantage of potential buy setups, maybe from here or somewhere up here, right? Where now maybe I have a better advantage or a better probability of buys taking place. But that's market psychology, is that look at what's happening. Create a low, this high got created, we created a higher low, sorry. We broke past that high, we tapped into this area. We're still in that kind of corrective structure, but the more more information we receive, then we push up towards the upside, right? Then we start seeing it. Wow, guys, that gold trade, fantastic. Let's check it out. Beautiful. Come on, man. This is how you break this shit down. So this is how we took the gold trade. We came to market. We looked at our day trading bias being bearish. We knew it's bearish because of de-escalation is incomplete. We got stronger jobs data last week, which is pushing the possible hike narrative down the line. We had a target level of 43.05. We knew that if price pushed up to 43.75, that we would still see sellers. And then we watched price action. We watched price push into 43.75. As soon as it started closing below, we took those sells live on market in the morning. We benefited off those sells. The bias played out perfectly. We reached the target level just now, reacting to it. And now if we break below, we can complete that intraday range towards the downside with ease. And this is how you use fundamentals to your advantage. You look for these setups. Most traders got caught chasing these buys, but we took these sells as soon as price closed back down below, and we took shorts there. And guess what? That is the quickest $2,000 I've ever made in my life. And that all that took was from 9:50 a.m. to 10:20 a.m. $30 worth of work, but it took us hours of preparation. It took us years of understanding and execution to make this shit look easy. This is hard as hell. 95%, 97% of day traders fail. And all we do is we pay attention to data that comes in. We call out trades. We execute when the time comes because we understand market psychology. We understand geopolitical psychology, and we also understand positioning to a deeper core. So now this is a fantastic take profit right at market's target level of 43.05. You can see we tapped right into it. And if we continue pushing lower, guess what? Perfect. We're going to reap the benefits of those. We're going to be able to then expand our take profit. But this is great take profit one, because this was 400 pips, guys. This is 400 pips free given out in New York session by none other than Market Team on Market in the Morning.
Bang, bro. Let's go, baby. Let's go, man. Keep running that like button up, guys. Absolutely. Like, subscribe, follow, share.
Smash that like button.
Yes, sir. Yes, sir. Smash that. Even NASDAQ, man, full 400 from that main area, 420 points. That is mind-blowing.
Yep, right.
Crazy, man. Crazy. And again, all pre-market. This is not, oh, we're guessing. We're going to try to grab a move here. It looks like we're moving. No. On ES, so somebody asked, Kevin, what was your trigger for the NASDAQ short? So I was looking for the confluence between NASDAQ and ES. So before it even happened, it was like 920 maybe. I said, I'm looking for ES to break this area of resistance and break its previous day high and close back below the previous day high. So that would be this candle right here, 950. NASDAQ was already in that resistance point I wanted to see us reject. Once we saw that selling pressure and we're in an area that we've been anticipating, then we can start to take our position lightly in size, right? A starter position. Could add into it into strength, look to keep your stop loss tight. But this thing just ran and ran, man. 425 points and counting.
Yep.
Yep.
And now, keep in mind, this may not last. Like, this could just be positioning for the buyers to jump in now, right?
Absolutely.
So keep that in mind. Now we're not looking for those sells anymore. Now we have to look forward. Think, is that okay? Maybe those buyers jump in and start jumping in from these lows on NASDAQ, or as we continue to tap into this demand area, is what we want to watch out for. Is how does price react to this demand area that Kevin's looking out for here? Is that does lower time frame price action start to shift now, or do we continue to see that dump? And likely we're going to start to see a potential shift in lower time frame price action, because now that makes more sense. Is that maybe from these lows, NASDAQ actually continues to push up, given that we start to see an exhaustion and we start to see buyers fade out here. Now, if buyers fade out, perfect. You have that setup. You have those buyers looking to, if sellers fade out, you have those buyers looking to jump in. And guess what? You'll be able to catch that now, that massive downside play that you previously were waiting for. Massive upside play that you were previously waiting for off of this NASDAQ demand zone.
Yes, sir. Absolutely. Absolutely. Definitely. If you are in shorts NASDAQ, I would definitely be looking to take profit now, especially because remember, we were mentioning before how we could be range bound, even though we had a crazy sell-off. That sell-off is still within our range. Look at our previous day on NASDAQ. Our range was between 29,750 and where we are right now, around 29,350.
Yeah.
So the fact that we had a 400-point range, we just had a 400-point move to the downside, we can absolutely start to chop from this zone and even just trade within this range going forward.
And if you start seeing that confirmation for that buy setup, like, by all means, take it, right? Like, don't hesitate on it. Take it, knowing that NASDAQ is at this demand zone, that if we start fading this move and we see buyers jumping back in, well, now you have that opportunity to execute those buys.
Exactly. Guys, great stuff. Great show today. Great analysis. Great gold trade, NAS breakdown, ES breakdown. I saw somebody else said that they took an ES short. Same. They usually follow the same general direction, S&P and NASDAQ. So that also would have been a very profitable trade. Good job, guys.
Yeah. Fantastic job, guys. Like, you guys are killing it. At the end of the day, it's you guys are executing the trade. We're not. We're here telling you, hey, this is a possible good area to execute. And if you decide to execute, perfect. If you don't, well, that's all good too, because we're just here to make money together. We're here to break down the markets, and we're going to continue doing it as long as you guys continue showing up.
Yep, that's it. We could give you all the sauce, every golden nugget we could think of. But if you aren't executing yourself, or you're not doing your own breakdown, you're not managing your risk properly, you're going too heavy in size, you might get stopped out while we're still holding a winner. You're going to be like, oh, why didn't they tell me that? That's nothing to do with us.
Yeah. And now look at my screen. Exactly how we mapped out. Hey, if ES pulls down to here and we start getting buyers jump in, that's what we're going to look for. And look, we had buyers jump in. And that's what we executed on, guys. This is like we talked about. We're like, hey, look for buys from this NASDAQ low. We talked about it right here. At 8 a.m., we're like, don't buy into these highs. Wait till NAS pulls down. Wait till ES pulls down. And then look for your buying opportunity. And that's what you have. Excuse me. And that's what you have to be patient for, is that look at that NAS bounce. Now we watch and see development, how this price action develops. But we called out those buys on NAS from down here to, hey, don't look for those sells, guys. Start observing how buyers jump in. Even if you got in after that candle, you still have massive potential upside even with like a decent sized stop loss, you still have like 1 to 3 risk reward going towards the upside on NASDAQ from these buys here. So gold continues to play out. We took the profit here on those 400 pips. We'll see how gold plays out throughout the session. But the point being is that, hey, we took this trade perfectly. We executed it on point. We waited for ES. We called out that, hey, we're probably going to see sellers come in if we see a break below here. And then we also called out buys on ES from the lows. We mapped it out pre-market before we even came down here that's what we'd look out for. Look at this. We had the arrows drawn and everything. On NASDAQ, we called out, hey, this is an area where you'd want to look for intraday buyers and see how if they're present here or not. And if they're not, guess what? NASDAQ might just pull down to a better buy demand area. But at least this is a way better buy price point than up here.
Yeah.
So perfect. Amazing buy execution on NASDAQ. Now this gives us a lot of probability for this to continue playing out towards the upside. And that's what we want. We want to be taking these trades that are aligned with our biases, aligned with what's going on in the markets, aligned with what institutional positioning is looking like. We don't want to get caught on the wrong side like these retail traders who are chasing this open range breakout. And they're looking for these breakout. And guess what? It lasted 2 minutes. It lasted 4 minutes. And all of a sudden, now you get sliced up in the markets. Yep. Because you couldn't remain patient, because you couldn't sit on your hands for more than 3 minutes after open, right?
Yep. Gold has similar chart. Scalp buys can be done. Somebody's asking in the chat, what do you think about scalp buys on gold? I'm not
really going to answer that because I think we've broken down the fundamental bias over the past 2 hours of gold bears and being aligned with the fundamental bias and how much it impacts you. And people were chasing scalp buys here, and look what happened to them. They got sauced up.
Right.
If you want to chase scalp buys, by all means, it could play out, and we could go off into 43.75, and you were going to think that's a win because your analysis was right. But then when 2 days later, when gold is sitting at 4,200, you're going to be like, oh shit, my 10 pip scalp buys just got eaten up. So it's about aligning yourself with the optimal positioning and where markets are actually aligned. The markets aren't aligned on a bullish bias for gold, so there's no reason for me to be buying gold. I'm not buying gold because I don't think that it's not a good support. I'm not buying gold because I know the fundamental catalysts are completely against it. Yep. And I'd rather be on the right side of the market than on the wrong side. So even if this plays out perfect, good for gold. But guess what? We took advantage of 400 pip sells. Do I really want to now chase buys after sellers have positioned themselves? Or would I rather now look for opportunities on equities as we mapped out those buys on ES and we executed on those? That's what it's about. It's about not chasing. It's about being present. It's about understanding the financial markets, and this is how they move, and I'm going to take advantage of it. Wow, Trump's family profited $500 million from crypto ventures and investors suffered losses.
Oh, that's it.
That's our president. Israeli military chief says forces ready to deliver stiffer blow to Iran. See, escalations. And there's another headline that's not aligned with the gold bullish bias, right? And so would you really want to be buying gold, or would you rather align yourself with actually what's happening? And to me, this isn't a buying trend, guys. I don't see any buys happening here. This is a bearish trend, and I'm looking to take opportunity, and I'm looking to look for those buys that are going to take place, right? Yeah. Even with NAS, like let's say you're in these NAS buys over here on the lows, and your stop loss is below here, and your take profit of these highs. Well, guess what? If this doesn't play out, cool. You took a stop loss. So what? Maybe NAS ends up pushing a bit lower before we go bullish. But does that really change structure? No. All that means is you attempted it at a known area where we said we were going to take buys, right? Where we said we were going to execute.
Yeah. You know, we definitely, and not for nothing, we can pull back, right? Pullbacks are going to happen. The question of, is it going to reverse back bullish is most likely a no. But we do know that CPI is tomorrow. Price action loves to be range bound leading up to a big economic event, whether it's an FOMC meeting, CPI, non-farm payroll. So because we had non-farm and we had some economic news last week, we're really waiting on the CPI to come out. So sure, right now gold buys, maybe you could scalp it for 5 points, but is that really worth it? You have to ask yourself, is it worth it is your risk reward worth it? If you were to take longs on gold right here, real quickly, like let's say you do take it right here on this pullback, and you put your stop loss at the low. But then, like, what's your goal? Is your goal just a small scalp, and you're not even looking for a 1-to-1 risk to reward? Is this a trade? And it also circles back to what Nalab was saying. I love what he was going over. If you're going to take 100 trades, is this a trade that you would repeat 100 times? Absolutely not. This is not something anybody would look to repeat.
Yeah.
Period.
It's not that it's like you're just kind of wasting your time or exhausting your efforts on that trade, right? So I'd rather just be aligned with in the right side of the market than be chasing my tail constantly day in, day out.
Yep. Absolutely. Absolutely. And yo, Seb, man, drop an absolute gold, no pun intended, in today's session in the comments section. Absolutely love that, bro.
Thanks for the engagement, man.
What's that?
Thanks to everybody for joining and commenting, So
Absolutely.
it's always a pleasure. But Kevin, I gotta jump in. I have a meeting right now, actually.
So, bro, you're late.
Gotta get going. But great session. Everybody, take it easy from my end. I'll leave it to Kevin.
Awesome, Nil. Have a great day. Thank you for being here, and I will see you. I will see you probably maybe Thursday after Jeeve.
Let's do it.
Awesome, bro.
Okay, bye.
Later. All right, guys, we will wrap up in just a minute here. If you guys have any questions, you want to cover any fundamentals, please drop it in the chat right now. Let me know what you traded, if you took any winning trades with us today. Give us some good feedback that we can share and show people that, listen, Market AI, it's the fundamental platform every trader needs in their arsenal. But not only that, but Market TV and Market in the Morning is the place to be every morning, Monday through Friday. Extremely happy to do these streams. Buying gold is take loss and stop profit opportunity. Yep, exactly. When you have a negative risk to reward, the joke on the internet I see all the time, I actually comment it myself sometimes when I see things like that, is instead of a stop loss and a take profit, to take loss and stop profit. Absolutely. Stuff like this is usually yeah, man. Absolutely. Stuff like this is absolutely usually paywalled. We could put Market in the Morning in the Market TV tab and just keep it paywalled. Just say, all right, listen, you need Market AI to access these live streams. But nope. We used to do these Tuesday and Wednesday and Thursday. Then we decided, okay, you know what? We brought Imre on, a great institutional trader. Let's bring him on Wednesdays. And I started hosting that with him on Wednesdays. And it was still only 8:20 to 9. I said, no, Lab, forget this 8:20 to 9. Forget this Tuesday, Wednesday, Thursday. At this point, why don't we just do Monday through Friday? And why aren't we running it into New York Open? We need to run it into New York Open to showcase and show people the advantages of using a tool like Market so you get those live headlines the minute they come out. Can you talk about how you identified your levels on S&P? What's up, Dina? Absolutely. Yeah, live CPI will be ready. You know it, man. We'll be live here for CPI. And I'm even going to host a special episode next week for the FOMC meeting, so we could cover that too. That's in the afternoon, so we'll be live from 2 to 3 here on Market TV. I guess it won't be a Market in the Morning episode if it's in the afternoon, so we'll call that show Aftermarket. But now, how I found that ES level, so really, like I've been mentioning, it's important to have an idea of higher time frame analysis. Now, everybody needs a foundation to their trading strategy to give them the opportunity to see what's going on in the higher time frame. Higher time frame price action and higher time frame higher highs, higher lows is always going to hold much more strength than a lower time frame higher highs and higher lows. So sure, if somebody was stuck on a 15-minute here, we'll do our replay system for a moment. They could have looked at this and been like, oh, look, we're making some higher lows. We're making some higher highs. We're clearly moving higher. They don't have any of their resistance areas. Wow, this is such an easy breakout trade. Our orb, bang, look at that. We had a breakout of our orb. I got to go long on NASDAQ up here. They were going long when we were going short. Why? Because we knew higher time frame, we were making lows. We had that NFP day. It really dropped us in our last area. Now, again, supply and demand being my foundation. What I look for is I look for price action like this, where we have our last area of consolidation before we have an extreme move. Now that extreme move could be to the downside or to the upside. In this case, it was to the downside. So this 1 hour supply, right, 1 hour resistance, okay, great. Let me look for a short opportunity in this range. Then I was also, again, this is NASDAQ. I know you guys mentioned ES. ES had the same thing, but on a 30-minute time frame. And on the 30-minute time frame, guess what? This is the area that price held yesterday. But when price held it yesterday, we failed to really move any lower. We just chopped around off of it. So when I recognize that price is not fully responding to that level anymore, I know that those active sellers, which was the reason I took these shorts yesterday, are now much weaker. So instead of using it as a supply zone, I then use that high of the supply as that liquidity sweep area, right? Where the market psychology becomes, hey, listen, this is our previous day high. This is that pivot high. A lot of traders, breakout traders, are going to see that and try to take these longs. If ES can give us that break and close back below previous day low, my exact words at from 850 to 910 was break above previous day high, close back below that previous day low on ES. Exactly what we got. Clean move to the downside, almost over 50 points in total on that move on the S&P. Really great trades, really great stream today, guys. Again, hope you guys were able to capitalize. If you have any questions, please feel free to drop it in the comments. We will be wrapping the show up in just a moment. Live for CPI, we're ready. Yo, Don, absolutely appreciate you, man. Appreciate you. Drop some love. Show some love if you haven't already. Hit the like button. Sans, it's my pleasure. Guys, have a great day. I will see you all tomorrow. Tomorrow is Wednesday, so I'll be hosting the show tomorrow with Imre. He's another fantastic trader, institutional level. Yeah, man, W's in the chat. Absolutely killer stream. Seb, man, we got to get you on here one day too, bro. You let me know. You hook me up, hit me up, and we'll set things up. All right, guys, have a great rest of your day. Trade carefully, trade with market, and I'll see you tomorrow for Market in the Morning.